Hi everyone, this is Rob Roy and welcome to the Elliott Options U.S. Market Update. As you can see, I'm back in sunny, warm Florida, trying to thaw out just a bit. As we do each and every week, the stocks that you see on your screen will be the ones that we cover in this recording. And if there's a particular stock you're interested in, you can go directly to it using the chapters feature in the recording. All right, so let's take a look at the markets. Before we talk too much about today, which had a nice update today, did have a little bit of economic news that came out this week, starting with Wednesday's Fed announcement, which was a non-event. As we talked about, the one thing that Chairman Powell came out is what I've been talking about. He pretty much took any hope of a March rate cut off the table, said it was highly unlikely. Then he said, well, maybe sometime this year. That sent the market down. And then he kind of backtracked on that. And so now we're back into figuring out April or May. So it was a pretty wild day intraday on the markets. Also today, we had the non-farm payrolls report that came out. That's the government's version of the jobs report, and it was pretty hot, basically twice what was expected. The ADP report comes out midweek. That's the private report, and it's just amazing how those two rarely coincide. So is this kind of the government trying to say, hey, things are really good, but you can shoot yourself in the foot a little bit that way, because that's one of the things that the Fed said that they want to cool off is the jobs market. So you would have thought that would have been a little bit of a rough day today. Not so much. So we take a look at the chart. You can see nice upward movement today. There's the downward bar on Wednesday as the Fed chairman took the March rate cut off the table. And then as what usually happens the next day, whatever happens on Fed day gets retraced. So then it left, are we going to just fill the gap today or what's going to happen? Wouldn't have been surprised if we filled it and turned and went back to the downside, but no, we just continued to power higher in the markets. When we take a look at the 10-day moving average, you can see we're really not that overbought. And if you're bullish and you want the markets to go higher, this is the exact kind of format that you want. You want that 45-degree angle, and that's because when the markets or any security moves in a 45-degree angle, the corrective moves are not that severe. So it does look like that Elliott wave post of up around 500 is in play, maybe sooner rather than later. Maybe we go up there first, and then we start the wave 4 correction. These projections will move as the wave 3 continues. Looking over at interest rates, this is another thing that I found really interesting about today's move. We did have kind of a vertical move down in rates, which that was interesting after Chairman Powell wasn't overly dovish, I don't think. Anyone really hawkish either. I thought he was kind of be somewhere in the middle, and that's exactly what he was. But we had these big downward moves in rates and then filled both those gaps just in today. So look, that's a pretty decent move up in rates today. And yet somehow the markets were able to continue higher, even the Qs once we get to tech stocks. As you'll see, looking at the dollar, song remains the same there. Led Zeppelin, just call the dollar Led Zeppelin. Not much is happening. But as long as we stay in this range, as you know, the dollar is constructive towards the market moving higher. So at some point, we're going to get a move one way or the other. We're at a 50% correction. Maybe the dollar starts to move down as we look more towards the Fed actually cutting rates. But for now, no harm, no foul with the dollar. Taking a look at the VIX. Now, something interesting on the VIX, and we talked about this in Tuesday night's Trade Finder. And by the way, if you haven't signed up for Trade Finder, you'll see the link on your screen. Please do so. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A. We have a great community in Trade Finder. Love to have you join us. So please register and join us this week if you haven't already. But what we were talking about Tuesday night on the VIX is that we're kind of starting to build a little bit of an upward trend. Just basics in the world of uptrends where you have a set of higher highs and higher lows. So as you see the chart of the VIX here, I've drawn the trend lines, and that's what we're looking at. So kind of this slow, steady move to the upside on the VIX. So does that mean that we're at the bottom of this channel? If we are forming a channel, and maybe we can expect some more volatility next week? it's not a bad looking formation for some sort of a steady move higher in volatility, and then maybe we get some sort of a spike at some point. But that's something to watch at the beginning of next week if we see some volatility come back into the market. But hard to imagine that with today's move. Looking at the rest of the markets, we look at the Dow and just kind of a steady move higher here. There's a little bit of market rotation. When you have these small bars like this, that normally means accumulation. So it feels like there is some rotation. Some people are starting to be a little defensive moving into the bigger companies on the Dow. It's usually a good place to hide if the market does start to pull back a little bit, or we start to see some recessionary signs. As you know, I've been saying I do feel like there's going to be some sort of recession. I just don't think that we're going to have that complete soft landing with no recession. The bond market has been telling us that a recession's coming, and I just learned a long time ago you don't discount the bond market, but just a nice steady move higher on the Dow. Something to keep an eye on there as well. But looking at the Qs, bounce back. Now note we still are in a wave 5. So we have a wave 3 here in the S&P. We have a wave 3 on the Dow. But then when we get down to the Qs, it's in a wave 5. Now we were wondering if we broke out of this tap box, and look how well Elliott Wave nailed this. And if you're not familiar with this software, it's from the Hub Financial Organization. You can find out more about it at hubb.com. It's called Profit Source. To me, it's by far the best Elliott Wave software that exists on the market because it's programmed exactly to the algorithm as Ralph Nelson Elliott wrote it. There's no personal adaptations to the algorithm at all. It's exactly as he wrote it. And if we break out of this tap box, perhaps that 5 relabels to a 3, but it hasn't done so yet. We had this little bit of a move down, which you would expect based on Powell's comments, and then turn around and right back up to it. So that's another thing to be watching next week. Which is going to win out? Are we going to have the Qs move up and relabel to a 3, or are we going to move up in that channel on the VIX and perhaps roll over on the Qs? Interesting stuff to take an eye on next week. Keep an eye on next week. As we look at the IWM, just not a whole lot going on. Look, we're exactly where we were to start the year. I mean, you could draw a line from the beginning of January to where we are. Nothing's happened. So we're just sitting here in this range. We are in a wave 5 to the upside, but we're starting to run out of time if we're going to get a move higher in the IWM. As you all know, the IWM stays range bound a lot. That's one of the characteristics of it. The good part is if you're bullish on the Russell, we've held 190. So as long as we continue to hold 190, we can look towards perhaps a run up towards that 210 level. But for now, just dead going sideways. Not a whole lot of action happening in the IWM. So we're looking at Bitcoin as we do each and every week. Bitcoin held that 40,000 level, which was really important. You can see this level here. We talk about this in our Hub Financial live show. And if you haven't registered for that on YouTube, you can go to the Hub Financial channel, subscribe there, and you can join us every Friday at 2 p.m. Eastern Time, where we have a live show and we talk about the markets there, and we get into a little bit of crypto stuff as well. So if you haven't done so, go over there and register there. So taking a look at Bitcoin, holding 40,000 is key. It would be nice to see it break above 44,000. That's going to be the next level. So far, that's acted as a ceiling. We're just under it at the time of this recording. But as you can see, the resistance level, if we break above that, then we could be off and running towards that 50,000 level. Now, on these recordings, I read each and every one of your comments. Appreciate the comments that you put down there. We have drawn the winner for January's alert program, our level 3, which is worth thousands of dollars. I'll announce the name once that person has been contacted. Once we get in touch with them, then we will announce the name, but it has been drawn, so keep an eye out for that. And now we're in February, so it's time to start leaving comments so that you're active in the February drawing. So if you're a subscriber to this channel and you post a comment, you're automatically in for the drawing for February. So back to Bitcoin, we'll see if we can break above 44,000. But talking about the comments, as I said, I read them all. We normally show Coinbase, but some of y'all said, hey, how about some of the Bitcoin miners? Coinbase is still holding 120, so not much to talk about there. As long as it stays above 120, we'll see if it can mount some sort of a bounce. But looking at CLSK, Cleanspark here, you can see that we're holding, so it's a very similar chart, just different pricing, where 8 is the area. Somewhere in here in this range between 7.5 and 8. We did dip down here. We got, close to disqualifying this wave 4, but not quite. Elliott would have been concerned with the fact that we came down to 70%, but 78.6% is the actual fib level that the wave 4 can correct to. But Elliott always said in his writings that if you get to 70%, oftentimes you do go to that 78.6%. So far, we haven't. So far, we've stayed above 8. And I think as long as we stay above 8, if you can see Bitcoin break above that resistance at 44,000, I think you'll see the miners go along with it. But right now, if you're long this stock, as long as it stays above 8, you're good to go. If it starts to break below that, then where is your tolerance? Would you want to exit right on a break below 8, or would you want to give it room down to that 7 level? I could see either one of those. But if it broke 7, I think you need to get out, because you can see this move to the upside here. There's not much in the way to support it. So if it were to break 7, we're coming down to at least 5. If you're aggressive, you want to see it hold 7. If you're more conservative, you'd want to see it hold 8 and get out if it broke below those levels. Looking at Alibaba, you guys asked about this for a couple weeks. We haven't looked at Alibaba in a while. And gosh, we got almost a bit of an island reversal here. So we've got a gap up, moving down, not quite, because you have to have 2 different gaps. But these bars, at least for now, are kind of floating on their own. What's going to happen here? Are we just coming down to fill this gap? Can we make some sort of a run? We only went to the 23.6% fib level, which in my opinion is the weakest of all fib levels. So far, it's held in the wave 4, and we've labeled a 5 because we broke that level 3 there. So we're technically in the wave 5. Are we going to continue down towards this target? Are we going to break 65 here or make it down to 65 on Alibaba? Or are we going to try to bounce once we get down to 70 and fill that gap? I think 70 is the key here. If we break 70, I don't know if this wave 5 low holds. I think we're probably coming down to 65 or maybe lower, but you want to see 70 hold if you're long this stock. Looking at the moving averages, one of the few stocks that's actually under its 10-day moving average. So kind of an ugly downtrend there on Alibaba. At some point, China's going to get their act together. I think there'll be some market rotation there. There's a lot of chatter about China on the financial networks. People are starting to kind of dip their toes in the water, if you will, on some of the China stocks and ETFs, and perhaps this could be the end of the move here. Watch it closely, because there could be some opportunities there as maybe some of our hot stocks cool off. But gosh, they haven't yet. Looking at Google, Google got us off to a weak start here on the earnings this week. As we said last week, 19% of the S&P was reporting this week. So a big chunk, but certainly many to come. We came down here and look, we held exactly where we needed to on Google there at 140. We have a pretty nice little doji there on the chart. We have this big gap down. So if you're not wanting to chase Meta or Amazon that we're going to show in a minute that had the big gaps up, and I'm not going to chase those, this might be a place to look here at Google. Maybe it plays a little bit of catch up. So it moved to the downside. I think Google has their act together. They were pretty cautious on their guidance, but this could be an opportunity as long as we stay in this 140 area. So that's where you would expect it to test. You look at the moving averages, we're a little bit oversold here. We've got a doji. What does that mean for Monday? Does that mean we bounce? We hit the 50-day moving average on the high. That's the royal blue line. And we may bounce on Monday, but if we break below 140, then that changes everything. But I did want to know, we actually had an alert at evotrader.com for our alert subscribers on Google. Google's one of my favorite stocks to trade based on Elliott Wave. Elliott Wave nails Google. It's been my number one stock over the years as far as trading Elliott Wave. Now we had this corrective triangle here. And you measure the mouth of the triangle and you look for that move to be the extension. And it was 15 points. So the target price was 155, and that's exactly where we went. And we had a great trade here on Google. Look at the high there on the 29th, 155.20. Well, then after you break out to the mouth of the triangle, what normally happens on these Elliott Wave corrective triangles is you retrace back to the breakout point. That's exactly where we went today. We're right back to 140. Which was the breakout point. So again, maybe take a look-see at Google at the beginning of the week and see if Monday gives us a little bit of a bounce, and perhaps that can be a catch-up trade with the other big tech stocks that you don't want to chase, like Meta. Look at that. Boy, was I wrong on this one. If you've been watching the last couple of weeks, I expected it to run up to 400. The old Star Trek tractor beam effect that I talk about so often, where those big round numbers just tend to draw the stocks to them. And I made the comments, I'll own it, that 400 was the expected move. And with the big, huge move that Meta's had, I just couldn't come up with, what could Meta say to drive the stock higher than 400? Well, they figured it out, because look at that. So I was completely wrong on Meta. But at this point now, I can't chase that move. There's no way that I can chase a big old gap up like that. Just not going to do it. It's not in my DNA. So can't do that. And then you look at Amazon, and it's the exact same thing. So we're about way overbought here on Meta. Look, the 10-day moving average was right at 400 too. So I definitely didn't see that move coming. Now on Amazon, I was kind of a watch and see. Notice that's not in a 5-wave pattern, but it came out with really strong earnings, and now we're overbought on Amazon as well. I wanted to see what their comments were about the consumer. The consumer was strong. Holiday spending quarter was great. That was what I was wondering. So I was in more of a let's wait and see what Amazon does. And that was a big gap to the upside. So if you caught either Meta or Amazon, good on you. Again, this one I wasn't, I was just watching to see what happened. Meta, there was no way I was going to participate in that move, and so would have completely missed that one. These two probably need to have a quiet period now. Do they come back and fill the gaps? Gaps get filled. Our data shows 94% of gaps get filled, but they don't always get filled immediately. It could take a while. But you would expect to see at least a little bit of backing and filling here on Meta and Amazon, maybe even just sideways consolidation. But I don't know at this point in time if they can power higher after these big gap ups today. Certainly had an effect on the upward move in the market today. Oil, we show that normally each and every week, and y'all wanted to see it again. Oil's just not participating. And is that a sign of the consumer? Is that where we're going to start to see weakness in the consumer? When I came back to Florida, I drove all night long. I like to drive at night. Normally, it's less traffic. It's quiet. But gosh, when I drove home Sunday night, there was a lot of traffic. People are on the road. The economy's moving. The big 18-wheelers were everywhere. But oil's coming down. We had this potential breakout. We had an ascending triangle here, very similar to the one, just not as big as we had on Google. And this is one of the things that can happen on these triangles. If you get an upside breakout, it'll either go in a 45-degree angle, it'll go vertically, or it'll come up and test the breakout. And sometimes it shows that it was a false breakout. And that appears to be what's going on with oil now, right up to a 50% correction. And now we have a qualified break to the downside in oil. So perhaps oil moves lower, maybe even down towards the 60 level. It'll be interesting when we test this wave 3 low at 65, but oil's just not cooperating with the rest of the market. So if that's an indication of where things may be going, we'll have to wait and see. And then last but not least, India just continues to power higher. Note we labeled a wave 5, which means we took out that wave 3 high. It was a few of the people on the financial network's best idea. Some of the institutions have their best idea. And even with the run that the INDA has, people are still looking to move there just based on the fundamental background that they have. They're adding business, they have inexpensive labor, and it's just churning to the upside. I wanted to see if we could break above 50. We did. We had just a little bit of a range here on the INDA, and that was between 49 and 50. We kind of talked about that Tuesday night as well, because here's where we were. Could we break above it? Well, we did yesterday. That's not the follow-through day that you want today. You would have wanted a higher close, but as long as we hold above 50, I think you stay long the INDA and look for that move up towards 52. Even if we break back below 50, that's not the end of the world. To get out of a trade, a long trade on INDA, I think we'd have to break 49. So as long as we stay above 49, I think you're long the INDA, and if you can stay above 50, I think you have added confidence that we may go up to that 52 level. So lots to talk about this week. There'll be lots to talk about again in the following weeks as we go through the rest of the earnings reports. Hope you enjoy your weekend. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.